good macros does not guarantee good returns. Seen that play out in China for about 20-25 years now. Do you think India can enter that kind of a territory? The divergence in returns is so much that we're somehow not able to make sense of why this divergence is there. Do you think we'll get stuck in that cycle? Do you think India should be fundamentally prepared for long periods of mediocre returns?
In the decade of 2011 to 2019, 2020 or so, actually,
Correct.
Your market returns were in the mid-single digits CAGR.
Correct.
And largely because your earnings growth in that period for the Nifty companies was also into mid-single. The data point which I want to focus on and look at is the share of the corporate profit in the overall GDP. If it is suboptimal, the corporate profit into overall GDP, then the overall market returns would be weaker, because at that point of time, if you look at the factors of production, then labor is doing better than the capital. But when the corporate profit is doing better, then the capital is doing outperforming the labor, and in that situation, the market returns also would be superior. We are in a situation of the 5 to 6% kind of corporate profit to GDP ratio. So as long as the corporate earning growth is higher than the nominal GDP growth, that means this ratio will either remain intact or will actually continue to go up. So in that situation, market will continue to outperform. We will not get into the period of the underperformance. On the other hand, if the corporate earnings growth falls below the nominal GDP growth, then this ratio will begin to come down.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.